welcome to the live stream. Let's see what the market's doing today and see if there's any opportunities to get into some stocks. To evaluate stocks and look at their fundamentals. Sometimes stocks are popular, but I want to make sure they're valuable. But I want to make sure they're valuable. If you look at the best companies on the stock market, the most valuable ones, all produce high free cash flow. High free cash flow. That's why I'm looking for high free cash flow. All the best investors depended on free cash flow and evaluating a company's ability to generate free cash flow. A company is not the stock price, and the stock price is not the company. They're two different things. Two different things. The big cap stocks have taken the show, but are big cap stocks gonna come back? Chinese stocks are exploding. The dragon has awakened in China. It could be the best trade we've seen in a while. AI hype is really interesting. AI is going to be interesting in the future, but is it really a business today? I'm going to pass on this stock. Just not enough discount, and I'm not really believing that they're going to grow as well as they should. Options can make your performance go a little higher every month and generate nice income. Listen to the great super investors. They are pretty generous with their knowledge and their wisdom. You just got to read their books and listen to their videos. Learn something new every month. In investing, you'll become a great investor. You'll build wealth. This is a buy stock. You're looking at a discounted stock, and it's unappreciated at this time. Don't forget about bonds. Bonds are a smooth, consistent way of earning a good return. And when stocks are really crashing, bonds stand up tall. Bonds stand up tall. You got to ring the cash register and take a gain. Defining when to sell a stock is a lot harder than determining when to buy a stock. And over time, you'll become a great investor and you will build great wealth. Hey, everybody. Thanks for bearing with me. It is December 23rd, and we are a couple of days from Christmas. For all those who celebrate Christmas, like myself, Merry Christmas, Happy Holidays, whatever you celebrate at the end of the year. I hope it's great. I hope you spend time with your loved ones, with your friends, and have a great time. I want to take a look at the stock market, and it's going to be a little bit of an extended play live stream. I've got plenty of time and can go over whatever stock you guys want to talk about. There's already a couple of people on, some of the usual attendees. Great to see you, Shadow Guy. And it was great to meet you in person this week. That was really fun. And Android PC, good to see you. And we definitely can look at GCT. It's a little tiny company. Hawker 1000, booyah. Very good to see you. Thanks for joining. I appreciate it. So the market's been on a little bit of a up and down pattern today. It was selling off quite a bit earlier in the day, and this is the S&P, and now it's beginning to rally. Now, typically at the end of the year, there's the Santa Claus rally where it just 75% of the time stocks rally in December. That's a pretty good number. And we'll see if this year the same thing happens. Will we have a Santa Claus rally? And I think this could be the beginning, maybe, and it'd be nice if it rallied for the remainder of this week. This week is going to be a little shortened. No trading on Wednesday for Christmas. Tomorrow, Christmas Eve, trading it'll be half a day. I believe it ends at 1 p.m. Eastern. So it pretty much opens up for 4.5 hours or so, and then they're gonna close the stock market. So I did commit too many trades. I've been trying to build up my cash position, and I did sell more of Ternium. Also sold JD. I like JD, but I just want to create more cash. I think we're in a good market. It's a little expensive, and I think I'd be more comfortable with some cash in earning 4.5% and ready to go. Should we have a nice correction in 2025? So that's part of my plan to make a lot of money in 2025. 2024 was a good money making year for me. I appreciated stock market. A good part of it is when we look at gains over the last couple of years, if we look at the low point after 2022, the NASDAQ is up 88%. So growth has been working in technology, and growth is the place to be. Look at that upward slope. And the goal in investing, at least my goal, is to double my wealth every 5 years or sooner. And stocks really help us do that when they're doing this, when they're just jumping up like this. So the NASDAQ is a really good place for us. Now, what's gonna work in 2025, right? Well, I think some things are going to continue to work. Some things I think they've gotten momentum and they're going to keep going up. One of them is that the big technology players, so Microsoft, Google, Amazon, because they have AWS, Meta, they're going to keep going up, is my expectation. So will Apple. I mean, I think it's incredible that Apple keeps going up in value, even though they're not growing their revenue. But, it's been working and people are really comfortable investing in Apple. It's nearing a $4 trillion market cap valuation. So Apple's working for people. So there we go. All right. So I've got a list of stocks that I thought I could go over. Those include SoFi. I kind of owe it to, I think Mike is in SoFi and it keeps saying, yeah, I'm going to take a deeper dive into SoFi. Well, here we are. The deep dive into SoFi is going to happen. It looks like Android PC want to look at GCT. So we look at GCT, symbol GCT. I wanted to take a look at Cisco. That's another stock that I'm thinking of selling. I bought it at the right time. I'm on a gain, and I'm not in love with the stock. I think it did the trick, and maybe I should sell it. So we can look at that together. I want to look at Novartis. That was a tip I heard from a little bird, and I wanted to look at Novartis. ADMA. Let's take a look at that. I wanted to compare Zscaler versus Sentinel-1 and CrowdStrike. Those have been really productive sessions on the investor calls that we have, as well as live streams. We've gotten into some good software companies and some good biotech, high growth healthcare companies. And one of them is Sentinel-1. I'm going to compare it against Zscaler. I'd like to buy one or the other. And I wanted to go over Chubb. Chubb is looking good, man. Their fundamentals look phenomenal, just excellent. So we covered that on I think on an investor call this past weekend, but I just wanted to keep talking about it because I'm thinking of buying Chubb in 2025. Bad Omen, good to see you. Thanks for joining. Hopefully you're having a good day. Somebody's on a swing there, Bad Omen. That's a pretty big swing on your profile picture. So it looks pretty cool. All right, let's get the juices flowing. We're gonna kind of lead off with GCT just to kind of get going, and then I'm gonna jump into SoFi. And SoFi is gonna be a deep dive, so we'll be in that one for a little while. So Giga Cloud Technology, now they kind of brand themselves as a technology company. Now I'm not in agreement with that. I think they're more of an industrial. They're like a logistics company, and they do logistics for, online companies that want to sell big products online. Giga Cloud will do the shipping for them, which is a really good idea. We're buying all kinds of stuff online, and some of these products are pretty big. Giga Cloud has the expertise, the right equipment, the right logistics um, system to get the job done. I like that. But they're not a technology company. I think they're more logistics like UPS or FedEx. So that would just be my note, my little disclaimer on GigaCloud. Now these guys, their fundamentals look really, really good. I'm going to show you. I've done a full evaluation on these guys, so it's easy to jump in and kind of go through them. Now these tiny companies, this is a $739 million company. If this thing takes off, you can double your money in 3 months. They just really, really move up quickly because it's such a small cap. The problem is that investors are not all that interested in these really small companies. And if you look at the PE, it's just not a very good PE. You'd think, if this company, believe they're growing really fast, I mean, what's going on? Why are investors not liking the company? Very high growth. Gross margins are a little low. Back to my point of these guys are more of an industrial. They're more like a FedEx, a UPS, which they have lower margins because they have to pay for the trucks, the equipment. They have to pay the employees that are going to be delivering the product. And so, having said that, it's still a high growth company, right? So it's still interesting. And maybe it's an acquisition target for one of the big players. So I think the fundamentals look really good. That growth is really, really, really good. When we look at the quarterly, even the quarterly, the growth is really good. But the market just doesn't have a lot of confidence in this particular stock. It's run up a bit and then it's really come down. So, this is one where if it starts to work, it's going to work really well for an investor. It's just a really unknown name. The margins are a little low, but overall, this thing values really, really well. I'll show you the intrinsic value that I calculate for Giga Cloud. So these guys generate good free cash flow. And I mean, if you just look at the cash flow, it's going to be worth like $2 billion, the company is, but they're under $1 billion. So this one's a really valuable company. It's just not popular. People don't know about it. And they're generating cash. I think their business is a really good business. It's not like, hey, people are going to order fewer things online. No, it's the opposite. They're going to be ordering more things online. So there's a lot of things I like about GCT. The piece that's always going to be a limiting factor is just there's not a lot of awareness of this company. So that's always going to keep the stock price, or that could keep the stock price low. Just when you look at reasonable valuations on it, it's heavily discounted. So I got in and got out of GCT. I could see myself buying this stock again. But it's just a really valuable company. And was it Android PC? What do you think? What do you think of GCT? Are you an investor in GCT? What do you plan to do with GCT? I'd love to hear that. And while you type that in there, you see that analysts, I'm not alone in that, feeling that these guys are heavily discounted. Analysts also believe this thing's, really discounted. Yeah, so you're already in the stock. This thing is discounted. If they keep performing at this level, let's say they become a $2 billion market cap company, it's just going to be hard to ignore these guys. So, um, it's just very good fundamentals. So GCT is looking good. Um, I might pick some up at the beginning of the year. I think it's, the one thing I would want, let's take a look at the chart. So you see that the company over the 5 years, see, there's the 5 year. I'm not a technical trader. I'm a long-term trader, but there's some things that a chart could tell me. And what I'm looking for is investors have realized that GCT is really discounted. It looked like investors had found this company here in September and it rose nicely, 45%. And then it gave up all those gains. So what happened? It's like it would have been logical if investors found it and it kept going up, kind of went from here to here, but it didn't do that. So that's kind of a surprise. I think most definitely this thing can get back up to $40 per share. Very, very realistically. So this thing's going to be on my watch list, and I might pull the trigger in a couple of weeks and rebuy into GCT. There's just too much value there to ignore. Now, did I put GCT in there? Where did I put GCT? Yeah, so I put them in technology. That's where they're classified, but I do not agree with the classification. I think they should be more of an industrial because that's where UPS, FedEx, and the other logistics players are. So I'm going to move this guy to a buy. I'm kind of pooling some cash, and I do want to get into growth. I think small caps have been working. They can continue to work. With regards to e-commerce, maybe one of the concerns that investors have with GigaCloud and players in the space is that, Donald Trump's come in and he used the whole tariffs, message is, hey, he's going to be a big tariff guy. And if he puts a lot of tariffs out there, maybe there is going to be a slowdown in e-commerce. I don't think so. I think in America, we're a consumer economy. People want their big TVs, they want their furniture, they want their cake, and they want to eat it too. So I don't expect a slowdown, but maybe other investors are a little bit concerned. All right, so that's GigaCloud. Looks really good. Looks really, really good. Good luck with that Android PC. Hope it works. All right, so let's talk SoFi. So SoFi is a top 10 stock that is requested on live streams, and I can understand why. It's a consumer popular stock, and they have some new things that I think are new products, new lending products that make a lot of sense. Now, they were valued just at a very high valuation back in 2021, and they really sold off. But it's not about what was going on a couple of years ago. Let's see what was going on about a year ago. And man, if you got into SoFi, you are a happy camper. You're up 147%. So that's happy camper status. And you didn't have to wait all that long. You just needed to invest in the third quarter of 2024. Man, sign me up. Sign me up for that kind of return. So, is SoFi worth it? Well, let's take a look. So, SoFi is now a $17 billion market cap company. It is working today. It's up 1.86%. Their revenue is $2.5 billion. PE 132. That is a rich PE. It's very high. Forward PE. Now, if you grow your revenue, that's why there's a high PE. If the market believes you're going to grow and disrupt the existing competitors in a particular market, that's why the PE is really high. Analysts do believe it is overpriced. So let's keep rolling. Now, the revenue is good, 32%. Their total revenue is $2.5 billion. They've grown it nicely over time. Let's look at the quarterly, see if it's a consistent quarterly number too. The quarterly growth is looking good. So good job, SoFi. Growing your business, finding new customers, selling more products. That looks excellent. So these guys are financial services. There's a couple of things that I'm going to look at. I'm going to look at earnings per share. I'm going to look at book value. I want to see book value grow over time. And I want to see earnings per share legitimize the stock price. So let's take a look at book value first. Book value within stock analysis. It is a book value calculated by looking at the balance sheet metrics. So you find it here. So here's the book value per share. And it has been going, it went up, it was negative, and then it went to positive, but it's kind of hit a plateau. Okay. New holdings, which I did a video on new holdings, that book value growth was really, really impressive. They had a really nice, beautiful chart. These guys, man, it's not wanting to give me this chart. Okay. But it's basically plateaued. And I would prefer to see that book value increase nice and smooth upward. See if I can get. So if you look at the book value of new, look at this upward trend. Beautiful. Nice upward trend. That's the kind of data we want, right? Because it creates confidence. If you have a nice smooth data set, you expect, okay, well, they're at 159, but it's an upward slope on the data. I would expect it's going to go from 159 maybe to 170, $2. And that's good data. SoFi, it's plateaued. And it's not giving me that chart, but you can see that it's plateaued. It's 529, 558. It came down to 536. Now it's 568. So the trailing 12 months is almost the same as 2022 and not too far higher than 2021. So I'm seeing a plateau there. I'm not quite sure why they can't expand their book value. And excuse me for clearing my throat. I am dealing with a cold. So Santa Claus hopefully delivers a nice rally. And Santa Claus gave me a cold this year. Isn't that nice of him? All right, so SoFi. I took their earnings per share. It's not very high. I think it's a little more risky than, a typical company. So I went with a higher discount rate. And when I use their earnings per share and I give them a 24 PE with a growth rate of 20, the stock is overpriced by 47%. So I think it's overpriced based on the earnings per share. They're not growing their book value. So when we look at analysts, 15 analysts cover it. And the best case, the best analyst, the projection, the target they have is 16, not too far higher than where we're at. One analyst is like, it's overpriced by a big margin. It's worth $3 a share. Wow, it's a really low one. But on average, those analysts are saying it's 31.6% overpriced. So to me, SoFi is not a buy. I think it's a popular stock, but the fundamentals are not there. They're not growing their book value. Earnings per share does not sustain that stock price. And that review is for Mike. I think Mike is sitting on SoFi stock. So wonder what he's going to do. Is he going to ring the cash register, or is he going to hold on and see if he can double his money again? Congratulations to him for having a really good stock that just really flourished here at the tail end of 2024. Probably the story of, the new president who's probably going to make banking more profitable and really be a partner with business. I think that has something to do with the stock really flying up. So that is SoFi. It is a pass. I don't own any shares, but I would not be buying SoFi stock. All right, so we went over SoFi. If you would like me to talk about a stock that you're interested in, put it in the chat and we will take a look at it. Today is a day when I can go for a couple hours. So if you guys are up for it and people want to put in stocks into the chat, put them in there and we'll take a look. Okay, so we went over SoFi. We went over GCT. I guess maybe one of these days I should have a scoreboard. How many buys and how many sells? I'll just do it on a piece of paper here. GCT was a buy. SoFi to me is a sell. So 1 and 1. We found one stock that's a buy, one that's a sell. All right. I'm curious to see Novartis. Novartis is a very large cap company. Last time I looked at it, looks like Hawker 1000. Any thoughts about Lakeland Industries? It's a small cap. Let's take a look at it. Okay, yeah. Let me get through Novartis and then we'll take a look at Lakeland. Yeah, we take a look at it. All right, so Novartis. And let me give me 1 minute. I'll be right back. Hey, sorry about that, guys. I hit the mute button and didn't take it off. So let me rewind it a little bit and start over on Lakeland. So on Lakeland, this is a very small cap company, 170 million in market cap, and the PE for the next year is going to be really low at 14, and strong buy according to analysts, 19% discounted, and the revenue growth is really good. So they're really beginning to grow. It's just really small, and the stock has been working. The good news about a stock working is the market's kind of found this stock and they're beginning to rally around it. If I look at, let's look at their gross margins. 40% ain't bad. I know that the market said this is a consumer discretionary. I guess so. I'd actually believe this is more of an industrial because the reason people would buy this is to be a firefighter or to work in a situation in a factory where there's some hazardous materials, hazardous stuff, flames and so forth, and that's why they would buy this. So to me it's more of an industrial, but I can understand it being placed in consumer discretionary because it seems like an apparel company. So gross margin is good at 40%. Free cash flow is not consistent. So that's a little bit of a problem. So we got free cash flow. You look at their free cash flow and look at the quarterly. It looks like their cash flow isn't there this year. They are not profitable. That's part of the reason. And they're accumulating accounts receivable, meaning their customers are owing them money and they're building up inventory. So it's good that they're growing their revenue and they're probably going to be able to sell that inventory. So I'm not too worried about that. We look at two analysts cover it. One believes it's worth $29 a share, the other one $26. They're going to be profitable, and the revenue is going to go really nice next year. So this is an interesting little stock. I mean, it's an interesting little stock. It might really move in 2025. This could definitely rally. I'm not an expert on, clothing that helps you if you're a firefighter. I don't know if anybody out there is. I think Hawker asked about this one. The fundamentals look good. The free cash flow doesn't scare me too much because I think they're building up inventories probably because their product's in demand. So they're like, hey, we got to put it on the inventory shelf so we can have adequate inventory to sell to our customers. So Lakeland looks good. It's not in my kind of desirability list because it's like an industrial. It's a small cap. I don't have an information advantage. I don't know this industry all that well. So I'd probably stay away from it, but I could see somebody else doing well with this stock. So good luck with Lakeland. That one looks good. Hyper Wizard. Good to see you. Hopefully you're doing well. ZTS. Zoetics. I think these guys, Zoetics engages in the discovery, development, manufacturing, commercialization of animal health medicines, vaccines, and diagnostic products and services in the U.S. Okay, got it. 74 billion market cap. Very good. Stock's down 16%, 23.6% appreciation over 5 years. Small dividend. Okay. So revenue's $9 billion. They are growing at 9%. And the last quarter, they grew at 11%. That looks really good. So a 10% grower. And their free cash flow looks good. And their gross margin's 70%. Looks good. I'd probably want to pay about 50 billion to 60 billion for this company based on their free cash flow. If I take that, the free cash flow they have, multiplied times 20, I get to like 50 billion. And where's that free cash flow number? Yeah. So I would get to like 46 billion. But maybe it's doing better than that because 10%, good gross margins. Maybe I could justify getting to like 60 billion in market cap. But the company is at 74 billion. So I think they're actually priced too high based on cash flows. They don't have the cash to justify that kind of valuation. Analysts believe it's priced at a discount because they're looking at earnings per share. 9 analysts cover this company, and the earnings per share look good. It's going to expand, looks good. So earnings per share is going to do really, really well. And the stock may move up, but what's interesting is this stock hasn't really done much over the 5-year. It's positive, which is good, but I don't think an investor would be happy with 23% appreciation and you were paid a 1% dividend each year. You're maybe doing about 5% rate of return. I don't think an investor would be happy with that. So the stock hasn't really worked. I think it's a little overpriced when you look at cash flow. And earnings per share is an okay way to value a company, but it's not the way that most investors look at it. They look at free cash flows. So Edix would be a pass. It would be a no buy. It would be a sell. So far we've got 2 sells. Yeah, SoFi is a sell, and then CTS is a sell. All right. Hyper Wizard. GXO. GXO Logistics, together with its subs, provides logistics services worldwide. The company provides warehousing, distribution, order fulfillment, e-commerce, reverse logistics, and supply chain services. Okay. And it's a $5 billion company. Market cap, revenues $11 billion. Okay. PE is really high this year, really going to drop next year. It's a strong buy with 58% discount. Interesting. It's growing nicely. Last quarter grew really, really well. And their stock prices dropped 32% in 1 year. Wow, that's interesting. Okay. So their revenue is growing. Now, this is a logistics business, so gross margins are real tight. I think we looked at GCT earlier and they were at like 20%. These guys are at 16. They're a logistics business. Those are the kind of typical margins that they're going to see. They have a little bit of cash flow. They have been growing it over time. So 254. So this isn't a highly desirable business. It's probably an industrial. Yep. And they do freight forwarding and logistics. So I probably would pass on this one because the margin isn't there. And if you go, their free cash flow was $254 million. And at best, I would multiply it times 20, but because their margins are so low, you would get to the market cap of 5 billion. But that's the best case. And I would want to see a discount, a pretty good one on this company, um, because it's just not a very desirable business. Their margins are not very good. You saw that. I think it was Novartis had 70% margins. Some businesses have really, really high margins. You can see the market cap for those companies really be high because those margins are high. This particular business has really low margins, so it doesn't carry a very high valuation. And from where I'm sitting, this is fairly priced, and it might be priced at a premium based on free cash flows. Earnings per share is showing that, hey, they're actually doing quite well. But I really base more of my evaluation on free cash flows. 12 analysts cover it. Some analysts are really optimistic with the price target more than 100% higher. Looks good on the earnings per share side. Yep. So for me, it'd be a pass. It's just not enough margin there. All right. So Android PC, you want to talk about J&J? All right. So J&J, Johnson & Johnson. So what's going on with J&J for the past year? It's down 7%. And we saw Novartis earlier, and I could say that the rate of return on Pfizer has been pretty down as well. Now, J&J is a really high quality company, $347 billion in market cap, $87 billion revenue company, PE 23, 14 is the forward PE. Nice dividend at 3.44. And it looks like the price target, analysts believe it's discounted by 20%. Yeah, interesting. So J&J is just not a desirable business anymore. These guys are going to be a healthcare, drug manufacturer, and a general healthcare company. Healthcare companies just haven't been all that popular over the last couple of years. J&J is growing. They're growing at 5%. All right. So that's pretty good growth for J&J. Free cash flow is stupendous, 200 to 20.2 billion. Wow. And then gross margin at 69%. Looks pretty darn strong. It's just healthcare. Healthcare hasn't been really appreciated for the last couple of years. Look at that. This is a quality company. J&J is a good quality value stock, but value has not been working. It just been kind of left off to the side. Growth, technology. The one spot within healthcare that's been working is small, high growth pharma or biotech that's growing really fast. Those valuations are working. Those stocks went up nicely in 2024. J&J hasn't worked. The fundamentals look great. I think it's discounted. I think it's a good stock to own and buy, but I don't know when it's going to start to rally. I don't know if it's going to be another year. We talked about how the new administration is going to make some changes in overall healthcare and the budget for the federal government. I don't know if that's going to hurt Johnson & Johnson. So investors may be waiting to see. This is a big cap company, but their market cap has pretty much stayed idle for 5 years, while companies like Nvidia and Apple have just been shooting up to the moon. So that's an interesting situation that healthcare companies are finding themselves in. Historically, these have been just excellent companies. J&J, Novartis, but the market just doesn't want to buy them. It's pretty interesting. If it starts to work, this is likely a place where we can come back and find some good value and probably make some good investments. But we're going to need to wait for the market to tell us, hey, these stocks are now going to start working. So that is Johnson and Johnson. And I'm going to take 1 minute break. All right. Sorry about that. So Android PC, J&J will have rally in 4 years after Trump mandate. Yeah, we'll see. We'll see. I don't know how healthcare companies are going to do in the Trump presidency. Um, yeah. Um, if if healthcare benefits go down, then healthcare companies will not do as well, and that's certainly a possibility. So maybe the market's going to wait to see what happens with the Trump presidency and how they're going to affect healthcare, how it's going to affect these companies. So J&J, historically just an awesome company, really, really good company. All right, so it looks like the S&P is up and the NASDAQ is up nicely. Looks good. And J&J is officially, for a value investor, I think it's a good buy for me. And it's a good quality company, pays a dividend. But boy, it's really hard to buy healthcare when other stocks are really working, like tech and consumer or communications, like Meta, Netflix, Google. So healthcare, I think, is going to continue to not be desirable to the general investing community, but to a value investor, boy, it looks really good. Looks really good. Mike, have you noticed that shipping companies are rebounding a little? Well, let's take a look. So shipping and shipping, of course, we can go over Zim. So here's Zim. So Zim's at $20 a share. It's not bad. For the year, it's doing well. Yeah, I think shipping, ocean freight, we'll see how these tariffs, play out. If the tariffs are going to constrict, international trade, that may hurt shipping companies. Domestically, like the rails. Maybe I can take a look at the rails real quick. So Union Pacific, man, their growth is looking good. Yeah, the growth has been good for Union Pacific. Oh, I'm looking at the balance sheet. Sorry. So not a lot of growth. So revenue growth for Union Pacific's been 2.5. This is a slow grower. So I'm seeing flatness within the rails. Zim is seeing growth, and a lot of that is in the rates. And they also had higher volumes because Zim is a good logistics company, ocean freight company. They have good ships. Their ships are more modern than their competitors. Yeah, we'll see. The economy, from what I'm hearing in economic reports, is growing at 3% in the U.S., which isn't bad. And internationally, I think country to country, you'd have to examine that. I know China's going to do like 5.6% growth rate. So growth is there. So logistics could work. So for logistics, Zim. And yeah, Mike, I've got a cold, so you're probably hearing that my voice is a little different. And I wanted to do a little live stream just because, I mean, there's only so much TV you could watch, right? Kind of socially distancing myself from my family and just hunkering down in my office so I don't get anybody else sick. But thanks for asking. All right. So, yeah, I mean, logistics could start to work. That could be a place. I'm not, I mean, for a while, I kind of wanted to be an investor in Union Pacific because a lot of like wealthy people invest in the railroads. You know, Warren Buffett, Bill Gates, and but I think I gave up on that. I'm like, yeah, I don't need to own a rail company. I think with companies like Zim, I really like Zim, but my opinion, my advice is you got to pick a place to buy. Like if Zim dropped below 16, I wouldn't be able to, ignore it. I'd probably buy, and I would buy, and I would probably sell in the low 20s. It'd be a swing trade. That's how I would go with Zim, because they're not like a company where the market just treats them as a long-term value developer or creator, like let's say an Apple. So getting into Zim and then knowing when to get out is the key. I made money on Zim in 2024 and glad that I owned it. Believe in the company. But that's how I would invest into Zim. And I would say that there's a chance that Zim gets sold off again, comes down to like $12 a share. And I will gladly buy shares into Zim, build a position, and probably see it go back up to $20 a share, $24 a share, and then sell it. So that's how I invest into Zim and logistics companies. Right now, things are expensive. The one area that's been discounted for a while is healthcare. We just went over J&J. We talked about Pfizer. We looked at Novartis. I mean, Novartis and J&J, their financials look great. It's like, man, A+ on having quality financials. But the market's like, hey, we're not going to buy healthcare companies for a while. At some point, I would have to think that's going to change, but I don't think it's going to change in 2025. What's going to work in 2025, I imagine, some things that are already working are going to continue to work. The AI story, it continues. And what'll be really interesting is we see that AI is now available. You can go on ChatGPT. and have that service. Microsoft provides the Copilot. Google Gemini is available. You can use that. Meta AI looks great. I've used it. Functions great. It's totally free. So we see that AI is out there. Now, is it gonna what's it gonna do for those companies? Right? I know ChatGPT charges like $20, for per user per month. They're privately held, so they're not going to tell us. But I think Gemini by Google is also similar pricing. You have a free version, but you could also have layers of paid subscription. And it'll be interesting to see how Google reports that, as well as Microsoft. And if you're seeing real businesses be built, that area is going to continue to work in 2025, 2026 is the whole AI ecosystem. What also could happen is people got way too excited about AI, and maybe there is no business. There is no, killer app and real valuable use case for AI, and these stocks really sell off. That certainly can happen, but I think for now, I would have to bet that the AI story is still going to work in 2025. Semiconductor stocks have been looking good. The thing that looked good over the weekend, we had an investor come in and say, "Hey, let's take a look at Lam Research." And Lam Research is the company that provides, I'm going to call it infrastructure for processors, semiconductors. So that's where TSM, Samsung, NVIDIA, Intel. And so these guys are feeding the whole semiconductor space. And this stock looked really good. If you look at the fundamentals, market cap's 94 billion, revenue of 15 billion. If you look at the revenue on the surface, you're like negative because that's bad in 2024. You see the cyclical, events of this particular company. But when you go quarterly, you see that in the quarters, they're growing really nicely. So if they keep this up, they're going to grow at 20% when you compare the fiscal year 25 to fiscal year 24. I think that's going to surprise the market, and it's going to start rallying in this stock. So this one's part of my buy list for 2025 is Lam Research. That came out of like thinking through what's been working, right? Semiconductor, and in a big way. So my two plays within semiconductor that I think are going to work is Qualcomm and Lam Research. Those are the two that I think are priced fairly, probably at a discount, and should do well in 2025. Other stories that will continue to SoundHound. All right. SoundHound. I am familiar with SoundHound. And it looks like Shane, if you wouldn't mind, tell me what you think of SoundHound. Before I start talking too much, you tell me what you think, and then we'll see what two opinions are on the company. So this is much bigger. The market cap is $7.5 billion. $7.5 billion. And the revenue is 67 million. So that is, what are we paying? 110, 120 times revenue. That's pretty expensive, and they're losing money. Okay. You don't have any ratios here because they don't make money. Analysts believe it's overpriced. And you've seen that they've made a good profit recently. All right, cool. Growth is good, 76%, getting up to in the trailing 12 months, getting up to $67 million. Gross profit's very good. Look at the quarterly. Okay. So SoundHound, forgot to tell you what they do because I am familiar with them. SoundHound AI develops independent voice artificial intelligence solutions that enables businesses across automotive, TV, IoT, to customer service industries to deliver high quality conversational experiences to their customers. Got it. Yeah. So I got my wife a new Mercedes about a month and a half ago, and they use this technology. So you talk to your car, hey Mercedes, and it says, how can I help you? And you start talking to your car. So that's what they do. I think it's interesting, but is it going to make a lot of money? That is the big question. That's the important question. So they're growing their revenue, but they're losing money. They are burning cash. Okay. And gross margin is 60%. Looks good, but they're just burning a lot of cash. Look at their balance sheet. So they have $135 million of cash on the balance sheet. Hopefully they don't have any debt. They have a little bit of debt. So they have $43 million of debt. So they have basically enough cash to go one more year at their current cash burn rate. They're burning like $90 million of cash. And once you deduct debt, you have about $100 million of cash. So they're going to have to start generating some cash or stop burning it at the rate that they're burning it. Analysts or 6 analysts cover it. One analyst thinks it's worth $6 a share, and another analyst thinks it's 26. They believe the stock is overpriced by 36.5. So for me, it's a pass. I would not invest in SoundHound, but just thinking through what type of investor would probably invest in SoundHound and make money is if you really know this space and you know that SoundHound is like, they are very unique and they bring a solution that everybody's going to want. If you have that type of knowledge and awareness, maybe you can make the right investment here. I don't. I do know who SoundHound is. Do I expect they're going to be profitable anytime soon? No. Do I think they are going to have a big addressable market? No. I think that what they do is good, but a lot of the big technology players have already been working with AI sounds. If you think about Apple's had Siri for 10 plus years, 15 years, and Amazon's had Alexa for 15 years. Those guys have been really developing a lot. So SoundHound is an independent option if you want sound stuff, but I just don't see a high amount of uniqueness and a high amount of value, a high amount of demand. I could be wrong, but that's what I'm seeing, and I'd share that with you. So that's where I'm at with SoundHound. Yeah, so HyperWizard, it's interesting you bring up Applied Materials. That's in a company that when we were talking about Lam Research, we actually looked at Applied Materials. And in my opinion, Lam Research had a better offering to me as an investor. But Applied Materials look good too. And that also provides the infrastructure and materials that semiconductors need, semiconductor manufacturers need. So Applied Materials is definitely, I think, discounted, but I'm picking between the two. I went with Lam Research. It's on my buy list for 2025, and I'll probably be building a position around Lam Research. So I'm glad you brought that up. And the video is going to come out, I think, tomorrow, where I compare Lam Research against Applied Materials. So there you go. Watch the video, and you'll get all my comments on the differences between the two and why I think Lam's a little bit better. All right. Bad omen. Question about Chevron. I know you'll probably suggest. You know, the oil business is, it had like a couple good weeks when Trump won the election, and then it's really fizzled. And part of it is that the oil price is not very high. So if you don't have high oil prices, oil companies are not going to make a lot of money. They're just going to exist. And I just don't see the storylines in 2025 for Chevron to be just an incredible success. I think it could go up modestly, and you get paid that dividend. So I'm actually going to trim back my Chevron investment a little bit. I think I have like $85,000 of Chevron. Probably bring it. Do I have 85 or 95? I'm probably going to bring it down to like 80,000. And the reason for it is the energy space has just been getting shellacked in 2024. And more recently, it's just been going down. Now, I heard a really interesting conversation yesterday online. And these investors are like, really good investors. And they had a couple of like, kind of golden rules. One of them they had was, don't buy a stock when it's hitting its all-time low, because you never know, it's going to keep going down. And then the other piece, golden rule, was don't short a stock that has hit its all-time high, because it could just keep going up now that it achieved that level. And I would have to say that there's some truth to that. Like CVS, which is a different industry, it's really amazing that stock keeps getting sold off, but it keeps getting sold off, and it's got tremendous value. Chevron has tremendous value, but it's just not doing anything. And it, in my opinion, is just a really good quality company. But for the year, it's down 6.6%. You put in the dividend in there, you're down, I guess, 1 to 2%. Over the 5-year, you're just up 18%. You add the dividend, you're averaging a yield of like 6%. It's terrible. That's not good. The buying was good in 2020, and the stock really rewarded investors. But after that, it's just been sideways. So I'm selling some of my Chevron stock a little bit because of this. It's just not doing anything. And I'm not going to be eager to get back into energy all that fast. I think there's other opportunities that it would probably work well. The other area that we found good value in was in small biotech pharma companies. And these are like United Therapeutics, Lanthium, Catalyst. They're doing really well. Like, you're doing great in the current year, and they have a lot of more room to go. So that's a space that I'm saying, hey, I got to put more money to work here. The 1 year, 25%, it's been going up. Over the 5-year, up 471%. So this is working. So put more money here. And put less money into Chevron. Put less money into stocks that just are not working. And these are working. This is one area of healthcare that is working. Catalyst, United Therapeutics, Lanthium. Those look really good. So, hey, Bad Omen, I really appreciate you tuning in. Thank you for the questions. I'm glad that when I'm sharing, investing is is a lifelong endeavor. And if anything, just hearing other investors talk, to me, I learn a lot. It also helps me set like, a good frame of reference. Like, okay, well, this is how other people look at stocks, and this is how they're seeing the market. So I'll continue to do that. And I would appreciate if you did the same. If you see it another way, I'd love to hear it. I'm glad you found it interesting. So thanks for tuning in. All right. So Shane, thanks for tuning in. Hyper Wizard, thanks for tuning in. Then Mike, LRCX. I've been selling more stocks recently than I've been buying. And the market's just been doing really well. I don't know which one to look at here, but let's go with the S&P. The S&P is up 25%. Look how smooth this chart is. And pretty pictures to me make me nervous. It's like, really? Why are these stocks being bid up so much? And that's why I'm creating more cash in my portfolio. I wouldn't be surprised if we have another like pullback, a nice one. We had this bear market in 2022. My only concern is that it it's sandwiched between two really good bull markets, one right before it, that the stock market in with regards to the S&P over 2 years it went up 106%. And then right after that bear market, the S&P over, call it 2.25 years, went up 66%. Oh, geez, man. That just makes me feel like this is an expensive market. So I'd like some cash just to be able to take an opportunity of a strong pullback, and hopefully find, those great opportunities like Netflix, Meta, Robinhood, these stocks that really pulled back strong, and I was able to buy them at a really high discount. And I'm, in some cases I am, I'm taking a gain, realizing a gain. So that's what I'm doing recently. I'm for the month of December, I don't think I'm going to be buying a whole lot, but I'm going to be selling some stocks. And then January, I have a feeling that we may see a little pullback, maybe a moderate pullback in stock prices. A lot of people like myself are going to be waiting to January to sell out of some positions like Chevron, that if I sell it right now, I have to pay taxes. Well, I'm not going to sell it right now. So I want to sell some Chevron, some Kroger, and another couple other companies. And then I'm going to wait till January. That way I don't have to pay the tax for another 12 months or so. So that is what's going on in my head. All right, guys. So I appreciate you guys tuning in. And if there's no other questions, we can call it a wrap. Let's take a look at the markets. Up 0.58% on the S&P. NASDAQ's almost 1%. Wow, good. So maybe Santa Claus is showing up. The Santa Claus rally maybe has just started. We'll see. It'd be fun to see stocks go up. All right, everybody. Thanks for tuning in. Really appreciate it. Everybody, have a nice afternoon, evening, and I will talk with you soon.